Hi, I'm Christine Short, Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we preview what's in store for second quarter earnings season. On Tuesday, Alcoa unofficially kicked off the second quarter earnings season for S&P 500 companies, beating estimates on both the top and bottom line. The consensus estimate for the second quarter currently stands at 6.5%. Nearly double the actual of 3.4% reported in the first quarter, yet still below the 15-year historical average of 8%. This is the strongest estimate going into the earnings season that we've seen since the fourth quarter of 2011. However, due to this historical pattern of revisions, Global Markets Intelligence believes growth for the second quarter will end much higher, around 9%. Analysts expect three sectors, telecommunication services, materials, and energy, to lead growth for the second quarter, all with double-digit estimates. Once again, the telecommunication services sector is anticipated to be the most robust, with expected growth of 38.3%. High growth continues to reflect the fact that Sprint Nextel was included in the index in the year-ago quarter and performed poorly, leading to easier year-over-year comparisons. After posting dismal results of negative 0.1% last quarter, materials is expected to rebound to 11.6% growth for Q2. Strength is found within the construction materials and metals and mining industries, with key drivers being a slowly improving demand situation, steady recovery in residential housing, and widening margins. Similarly, energy posted nearly flat growth of 0.1% in the first quarter, and is now expecting second quarter growth of 11%. The improvement in refining margins, as well as higher year-over-year natural gas prices, due in part to gas inventory levels that were severely depleted by the harsh winter weather, is driving increased growth expectations for the second quarter. To the downside, analysts estimate the financial sector will be the biggest detractor from second quarter earnings growth, with negative growth of 1.2%. Three of the big banks, Bank of America, JP Morgan Chase, and Citigroup, are all estimated to post double-digit declines for the quarter, partially due to lower mortgage originations and legal fees. Revenue growth expectations remain respectable at 4%, in line with the result from the first quarter, but below the 15-year average of 6%. Analysts expect the healthcare and consumer discretionary sectors to lead top-line growth, while the telecom sector will lag. Next week will mark the beginning of peak earnings season, with 60 companies scheduled to report. The main focus will be on the financials and information technology companies. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.